Hi there traders, this is Chris from Elite Currency with a new video on the euro dollar and pound dollar. Alright, so interesting bearish break on the euro dollar right now as we speak. Yesterday evening, my time at least, there was the interest rate hike on the dollar from 2% to 2.25% as expected. So I thought maybe it's priced in, but apparently not, because the euro dollar is falling now quite substantially and breaking through all these kind of support levels that we had, which was the 21 EMA, the previous tops at around 117.25 that became bottoms here in this particular part. As you can see, that price is breaking through that right now. As you can see, that's this zone I'm talking about. Those fractals right there indicate the break, and price is now pushing below it. Price basically seemed like it was going to make an ABC. It made an upside correction and made another attempt. And this was very important for me. That third attempt is typically the one, or the second, I should say maybe, is the one that sees the breakout and sees the follow through with the trend. But it failed. Why? Because look at the big wick on top and look at the bearish candle. That was a huge sign of exhaustion, and that indicated that there was a good chance of a head and shoulders. As you can see, left shoulder, head, right shoulder with the wick and the bearish close. Indeed, sending the first signal that this is going to fail for upside, and now of course the confirmation that price is breaking below this uptrend channel. So what next? So I renewed the template. Obviously we're seeing the break of this support trend line right now and below the 21 EMA. So I think that this swing is over, and I think that if we compare this swing, and this swing, it looks like we finished here an ABC correction. However, when we look at the daily chart, I think that basically we had a 5-wave pattern here like this. An ABC correction is what we expect. But when we look at the length of the 5-wave pattern and compare it to the length of the 3-wave pattern, I think that the correction will expand. So I don't think that this ABC is enough. I don't think that the simple ABC is sufficient here at this point. And I think that that will be an expanded correction, which means that this ABC pattern will probably be part of a W. That's the first correction. Then we'll see an ABC down for X. We'll see an ABC up for Y. And that will complete the bigger wave here. Here's a wave A, and here the wave B. And then price can go down again for that wave C. All right. So what next? Well, I think a 3-wave pattern back to the fibs. Let's put a fib on this entire swing high from bottom to top. And we can put a fib from here to here too, by the way, just to see if it stopped at any useful fib. And it did. It did stop around the 38.2 fib, around 117.75, by the way, as you can see right here. All right. So the next stopping spot could be up in here, 50 or 61.8 fib. Let's get rid of that one. All right, so the ABC is likely to fall probably to the 38.2 fib, which is the bottom of the 21 EMA. So I think that there's going to be more downside pressure here. 38 could be a bouncing spot for a wave B, like this. There could be a bigger head and shoulders pattern that could play out around this level, around 117.50. And then there could be a wave C, like this, to the 50 or 61.8 fib, like that, around 115.50 or 115, which in turn I think will be a potential bouncing spot for upside like this and continue like that after a pullback towards those targets. So this is what I think is the most likely. If price were to break below 116 with a lot of momentum, then this particular analysis might be invalidated. If it breaks below 115 as well, then of course there are reasons to be careful, and maybe we don't get this bigger upside. 115 is important because of this level too, which is still a head and shoulders level. So we have left shoulder, head, right shoulder for a potential inverted head and shoulders. So what could happen is downside to 38, up for a head and shoulders, down back to the 61, and up after an inverted head and shoulders. So we have an inverted head and shoulders here, and we have a normal head and shoulders here. That's what I expect for the moment on the euro dollar. Let's go down to the 4-hour chart. So if this is a wave A of the bigger ABC like this, then basically this could be a wave 3 perhaps, At this moment, price is responding to the 23.6 fib at this point, but we don't know how. It could just be a light kind of bear flag, for instance, and then push. In that case, this is probably wave 1, 2, 3, 4, 5, like this, to finish that bigger wave A. All right, so any bear flag could be good for a follow through to the downside, and aiming for that 116.20 zone where the 38.2 fib is visible. There of course there could be a potential bounce. Engulfing twins around that level could start that wave B we talked about, 3 wave up for wave B up to around that 117.25 zone, which is a resistance and target. All right, pound dollar. Pound dollar basically seems to have completed an ABC correction like this. Didn't go into the territory of wave 1, although it was close, but ultimately stopped at this resistance zone and the 61.8 and 78.6 fib for a potential head and shoulders pattern as well. And it seems like price is bouncing at that zone after completing maybe some kind of channel or bear flag perhaps like this. And at this moment, price is challenging that and trying to break through this support trend line of the uptrend channel. And if it does break here, that could be a breakout of this flag and pattern for a bearish breakout towards a new low. As you can see, we might expect price to fall back, for instance, to the 130 level. Now with the pound, you can see that it broke above the third, went up to the fourth, then went up to the fifth, but ultimately it looks like there's a bigger reversal appearing after hitting the fifth level. Let me renew the template. There we go. So what I'm expecting is a lower low around 130 to complete the 5-wave pattern. That could be wave 1, then expect a wave 3 wave up for wave 2, and then a continuation down for wave 3. So for the moment, I think that if we put a fib on the wave 3, we'll see where the target is of wave 5, and that's the -272 target. It's the main target at around 130, and the weekly S1. So once we get a bounce there, all right, if we get a bounce here, we will put the fib on the entire swing high, swing low like this, and expect price to move up in 3 waves up to the 50 or 61.8 fib, which in turn is a bounce and a reversal spot again. For the current price action, it could be a breakout indeed. As we're looking at this price action like this, it is breaking out as we speak. I think the better trade maybe, although this is possible to trade in itself, could be just to wait for price to make a pullback into the 21 EMA, get a fractal there, and then wait for the bounce and continue like this for a continuation towards 130. Also, keeping an eye on this 4-hour candle could be useful. Do we have a MACD that is indicating a break below the 0 line? Do we have a close below the 21 EMA? That could be, of course, the first step. Useful to keep an eye whether you get a kind of a confirmation and a trigger of more downside. All right, that's it for this week. We'll be back on the weekend with a new outlook for next week. More free analysis, of course, you can find at elitecurrency.com. Multiple updates per day, and wish you all good trading. Cheers.